Hello investors, welcome back to our YouTube channel Markets Analyzers. This is a new channel. Try to subscribe this channel, like the videos as well. And I won't mind if you share the videos with your friends as well. So let's begin the video. What is a cash flow statement? A cash flow statement is a financial document that provides a summary of the cash inflows and outflows for a business over a specific period of time. Did not understand, right? Let me tell you again, but in a different way. Tell me, what is the work of a company? Obviously, the work of a company is to earn money and spend money. Any company, whatever type of company it could be, it can only earn and spend money through three activities, which are operating activity, investing activity, and financing activity. So each of these activities can either generate or else it will spend the cash. So these three activities combined are called cash flow statement. Let me now ask you again, what is a cash flow statement? Cash flow statement provides a summary of the cash inflows and outflows for a business. Now let's discuss these three components of cash flow statement, which are operating activity, investing activity, and financing activity. Let's begin with operating activity. This section shows the cash generated or used by company's core business operations. For example, the core business for a company like Tata Power is selling power. A good business should always generate cash from their core business operations. Next, investing activity. Investing activities means buying or selling long-term assets and investments. For example, when a company buys a new machinery or builds a new factory, or if it sells some existing machinery, they all come under investing activity. If a company like Tata Power, for example, if they acquire a new power plant to generate more electricity, then it comes under investing activity. Similar to operating activity, investing activity too can either generate or consume cash. If investing activity is a positive number, means it tells us the company is selling an asset. If Tata Power sells some of their existing buildings or some machinery, then they are getting cash by selling those. Whereas if there is a negative number, it means they are buying something like a machine or building, investing back in the business. A good business should have negative investing activity. Negative number means they are investing money in the business. And finally, financing activity. In this section, an investor can identify whether the business is trying to raise money or pay off debts. It includes taking new loans or issuing new bonds or raising capital by issuing shares. Everything related to company's finances are in this section. It can also be a positive number or a negative number. If it's a positive number, it means the company is taking new debt. It could be in any way, either through banks or by issuing bonds. If it's a negative number, it means they are paying off existing debt, or they could be paying dividends to their shareholders. Either of these two things. A good business should have a negative number in financing activity section. So always operating activity should be positive number, investing and financing activity should be negative. That's how a good cash flow statement should look. I hope you got an idea of what an income statement is. So now let me give an example. Let's say this is a random company's cash flow statement. First, cash generated from operating activities. In 2021, they have generated 10,000 rupees. In 2022, they generated 20,000. In 2023, they generated 30,000 rupees. A growing operating income is always a good sign. It means they are earning more money from their core business operations every year. Next, investing activities. In 2021, 22 and in 2023. In all these 3 years, you are seeing the negative number of minus 5,000, minus 6,000 and minus 7,000 rupees. It means they are investing money back into the business. They might be buying new machinery or they might be building a new office, whatever. A negative number indicates that it's a good sign. And finally, we have financing activities. Even in financing activities, in all the 3 years, we are seeing negative numbers. It means either of these two things should have happened. First, they should be paying off their existing loans or they should be paying dividends to their shareholders, which is a good sign. A negative number in financing activities is also a good sign. So this is how a good company's cash flow statement should look. A stable and growing operating activities, a negative investing activity and a negative financing activity. Let me now change few numbers and see how it changes from a good cash flow to a very bad cash flow. Now look at the operating activities. They are decreasing from year on year. It was 5,000 rupees in 2021, which reduced to 3,000 in 22 and it came down to just 1,000 rupees in 2023. It's not a good sign. Any company which is decreasing its cash from operating activities is a big red flag. Next, if you look at investing activities in 2021, they have invested 5,000 rupees back into the business. In the next year, they sold some of their assets and they got 3,000 rupees back to them. And again in the next year, they invested 2,000 rupees. It's not as bad as operating activities. They are trying to invest some money back into the business. And finally, if you look at financing activity, in 2021, they have raised money worth 10,000 rupees. And again in 2022, they raised money worth 3,000 and again in 23, they raised 7,000 rupees. They are clearly not generating enough cash from their business operations. That's why they are making new loans and raising money. Now try to add all these. First, add all these in operating activities. It comes at 9,000 rupees. It means in last 3 years, they have generated 9,000 rupees cash from their business operations. Next, add investing activities. We get 4,000 rupees, which is a negative number. It means they have invested 4,000 rupees back in the business. And finally, if we add financing activities, it comes at 20,000 rupees. It means they have taken loans worth 20,000 rupees in last 3 years. Now compare financing activities with operating activities. They took loans worth 20,000 rupees in last 3 years, but they have generated just 9,000 rupees from their business operating in last 3 years. It's not a good sign. If we calculate interest cost for the 20,000 rupees at just let's say 6%, it comes at 1,200 rupees. But the cash they have generated from their revenue in 2023 is just 1,000 rupees. If we take interest at 10%, means it comes even higher. We just took 6% and they are unable to pay that 6%. So clearly they are unable to even generate cash to pay their interest to their loans. How will they clear their loans? As soon as you look at the cash flow statement of any company, you can stop going further to analyze the company if you find red flags at the beginning stages itself. So I hope you understood the video. Only if you found the content informative, like the video and subscribe to our channel Markets Analyzers. Do comment the type of videos you want in the comments. I will come back again with another interesting video. Until then, have a great time.